The Hedgeless Horseman here. It's October the 15th, 2024. First of all, thanks to the sponsors. In today's video, I'll go through some news, some companies, some what you already know, also a few that I might not have talked much about or talked about at all. Some actually are microcap companies, and by definition, not super large positions because I can't really get into microcaps with a very large position. But still, I mean, I do think there are some pre-discovery juniors out there that are very much cheap. It's just that the bulk of my money, and same with the hodl folios for family members. I mean, most of the money, like 70-80% of the money, is in proven stories in this, post-discovery developers, yada yada yada, and especially the kind of alpha beta hybrids with potential cash flow or close to cash flow, where it's, if they're self-funded, doesn't really matter that much what sentiment does. Anyway, first of all, I think metal started down during the night, pre-market open. I think both silver and gold was down. Then turned around like they have done quite a few times. I mean, gold is basically at all-time high still, just hovering just under all-time high. Silver is, not too far away from $32. Bitcoin, I think, might have stolen the show a bit today. I didn't see much reaction in the juniors to the higher gold and silver price. Again, might be because people get distracted by this, for example, because again, there is literally, I mean, if I had to guess, there's probably less actual investors, especially, real value investors in the markets overall than there's been in a long time. I mean, otherwise you can't really explain how crypto can do what it has been doing. I mean, it's in a sense crazy that there are so many cryptos, and still Dogecoin is at, I think, $16 billion, something like that, created as a joke. And that's quite interesting that a joke can be valued at $16 billion when you have real assets selling for some of the cheapest levels over the last several decades, I would think. But again, this might be one of the reasons. Like, I mean, this kind of looks like some sort of a bull flag, and yeah, I mean, there's simply, I mean, just look at Twitter. If there's any account that's like, oh, I'm a Bitcoin maximalist, I mean, there is no shortage of strictly, or I should say, there's no shortage of accounts strictly focused on primarily Bitcoin or crypto overall with like 100,000 followers or more. I mean, there's tons of them around. And if you read some, most of the tweets, it's just, I mean, look at Michael Saylor, for example. His account is basically tweeting AI images of Bitcoin with some one-liners, basically. That's about it. I mean, it's just absolutely incredible. And I continue to believe, again, that as long as this stuff is going on, it's kind of an open goal when it comes to buying hard assets with real value on the cheap. Because when things get real, I don't expect there to be much enthusiasm in crypto anymore. And what's also kind of funny is that, you have Larry Fink of BlackRock. I mean, somebody mentioned that he had said that he believes Bitcoin will reach the same, market cap as the U.S. housing market or something like that. Some said that he didn't actually say that. I don't know, but it just goes with the. I mean, it's just standard procedure for any kind of let's say bubble, the higher it goes, the higher the target prices, if you know what I mean. It's like somebody calculated that to, oh, then it's, $5 million a coin, stuff like that. I mean, that's typically what you see. I mean, the in order to get more people buying, you just keep increasing the target price. Okay, if people are not buying when people are talking about, $300,000 per coin, we get up to $5 million per coin, stuff like that. So I mean, does one get affected by this? Of course. I mean, it's hard not to get, let's say, FOMO. And like, oh well, if crypto is doing well and juniors are still very cheap, and obviously they have moved up. I mean, I think the bull market started. I think we're 6 months into a bull market in juniors already, so it's just a gradual rise so far, despite gold being at all-time high, as you know. But I just remind myself of the basics. There are no free lunches, and just seeing the amount of people out there who probably have never had a really successful investing career, I just assume, at least, because most obviously do not, since like 5% can even beat the market, let alone have stellar returns. So most comments on Twitter are by people who can't or are not great investors. So when you see the amount of people that are just absolutely banking on not doing anything except holding Bitcoin in order to get rich, and how many are Bitcoin maximalists, basically it's like there's no fear of loss. I was gonna say that they just assume that an asset that's been around since, I don't know, 2012, so only 12 years of history, the people are literally going all in on this stuff, which is of course absolutely crazy. The least proven asset there is, the least proven class, and people at a time like this basically are going all in, and for no better reason than they agree with each other that it's just simply going to go higher. Not any real reason. It's like there's no margin of safety. What actually, what's the utility of a Bitcoin? What's the whatever? There's no cash flow, obviously. So it's just it's like the perfect trading sardine in a sense. So it's very appealing because of that. Because simply you cannot make a severe valuation mistake. When it comes to real investments, you can. I mean, it's like if you pay whatever for a car. I mean, let's say the car doesn't work, or something breaks down, or there's problems with whatever. It's like most things, at least actual real investments that are tied to something real, then you kind of have to. I mean, I should put it like there's at least a real anchor behind it. Like a car that doesn't work obviously isn't worth that much. So there's always a risk with buying anything really. There's a hidden flaw, or there's whatever. It's like you buy a house and there's mold or something, or there's like water damage that you didn't see, and yada yada yada. So it's like it has consequences. So you have to actually do some due diligence. With Bitcoin, it's kind of perfect in a sense that nobody knows what it's worth because nothing is tied to it. There's no cash flow, so there's nothing to discount, and that's, I think, again, a very simple solution for a lot of people, or it's like a thankful thing, because in that case, well, if the case is simply that it's going to go higher, there's not much to be wrong about it, if you know what I mean. Or it's like take mining stocks. I mean, there's, I don't know, how many things that could go wrong. Like, oh, what's the social license like? What's the metallurgy? Do they have access to capital? I mean, there's just so many potential pitfalls, and that goes for obviously investing overall, and especially the higher the risk, the more the pitfalls, and potentially the higher returns as well. So again, I think it's just a perfect trading sardine. Yeah, because again, it's like even. I mean that's basically, if you look at Bitcoin, it's like the case for Bitcoin. It's mostly that it's just going to go higher, either by some mathematical formula, or because mining costs or whatever, or because somebody said, allegedly said, like Larry Fink, that it's going to be priced as much as high as the housing market. So in that case, you can't fact check it, if you know what I mean, because nobody knows, and that's the beauty of it in a sense. It's like so simple. It's just going to go higher. And obviously, the more people believe that, the more people will buy and all that. But there's nothing really, again, that's like backstopping Bitcoin. We don't even know if Bitcoin is going to be a thing in 10 years. It's like we have absolutely no idea. It's only been around for 12 years. Never seen a currency reset, never seen, a real financial crisis or anything like that. So it's the newest experiment, let's say, that just happens to coincide and do pretty well with the biggest ever global bubble. So my view of Bitcoin is, I mean, it's just unacceptable risk, because it's technology. It needs a network. It needs power. It needs a huge amount of data centers for it to work. It's electronic, all of that kind of stuff. So I mean, there's so many risks and potential challenges, and again, that it's just the fact that it's technology. There's like that is any one of those is an unacceptable risk to me. Especially, it's like when I see people compare it to gold. It's just the most, I don't know, ridiculous thing ever, basically. I mean, you have one with basically a spotless 5,000 years history. One of the few things that's basically kept its value throughout the rises and falls of empires, of hundreds of or thousands of currencies, different rulers, catastrophes, global financial panics, wars. That's gold. I mean, it's basically one of the few things that has always worked since the dawn of civilization. And then you have something that's been around for less than 15 years. And that's supposed to be just assumed to have store of value. I mean, it's the most ridiculous thing ever. It's like you just come up with something and say this is a store of value. I mean, to me, a store of value has to be proven that it's a store of value. And the funny thing is that people doubt gold's store of value. I mean, people doubted that around the 2015 bottom. I think they doubted, the brown bottom around 2001. So despite 5,000 years of history, people still doubt gold's store of value. Yet, some take it for granted with something that's only been around for 15 years. Or less than 15 years. I mean, isn't that incredible? Yeah, I mean, just a few thoughts on that. So, just a few concepts. I mean, I've said this quite a bit recently. It's like I'm really focusing a lot of sunk costs and let's say birds in the hand, especially given where the gold price is. And what I really like with some companies is the fact that, okay, if you have something really undervalued, but you don't have cash flow, you still can get the, let's say, punishment either from, lack of capital, so you can't do much create value. And if you create value, you still obviously have to dilute. And if sentiment is really bad, etc., you might have increasing dilution almost. So that's a negative spiral. That doesn't mean that value isn't created and that the value created will not show up in your portfolio one day when the market gets a bit more rational when it comes to these juniors. Now, of course, that's this sector is forever cyclical, so we're gonna have euphoric levels in gold juniors, silver juniors, etc. one day, because it always happens and always will. We just don't know when. And even, I mean, if you raise whatever 10 million and create 40 million or more of value, even if you have a dilution discount of, let's say, 15%, that's still value add, obviously. I mean, that's good. It's just that, I mean, if you had to pick, you would obviously take the no dilutive value creation route. So that's why I like, and I've talked about this recently, is like, I mean, in Integra Resources, I might have, I don't know if I have a slide on them, but it's like when they're merging with Florida Canyon. Well, I actually, yeah, well, I could go with this first. I mean, this is basically how I see the opportunity today. I remember the 2015-16 bear market bottom. Juniors were trading at multi-year lows. They're very cheap, but their projects were almost worthless at the time because gold was at $1,100, silver was at $14 or $13, whatever it was. So on average, I do think market caps were even lower than today, if I remember correctly. But the value of those projects, the value of the companies at face value, at spot gold, silver, spot nickel, whatever, was substantially lower than today. I mean, most projects didn't make any sense really to build because many operating mines were losing money. So how much is a money-losing operation worth? Let's say it costs $200 to $300 million to build a mine that's going to lose money. Obviously, that's worthless, or actually negative value. So compared to the value, I mean, this might actually be generous, this value bar here. But let's say, some of the better juniors out there, they had projects that were, might actually work, so they had some value. And again, market caps were low, but the value was very low in 2024. Now with gold at all-time highs, silver 32, nickel doing okay, copper doing okay. It's just absolutely crazy that market caps are not higher than they are. Value has absolutely skyrocketed just over the last 6 months, basically. Market caps have not skyrocketed. I mean, some of, just from the gold price going from 2,100 to almost 2,700, the NPVs of some of the juniors, I mean, the increase in NPV of their projects, if they're a developer, for example, has probably gone up multiples of what the market caps are today. So you have kind of, if you look at the price to value gaps right now, even though market caps might be a bit higher than 2015-16 bottom, the amount of value stealing going on right now is night and day compared to 2015. You weren't stealing that much value at the time because there wasn't much value. You were being a contrarian, basically, that gold prices are going to turn around, silver prices are going to turn around, and these projects that are being given away right now because metal prices are so low, when metal prices go up, they will be worth something, so the market caps will reflect that, and they did. I mean, my portfolio went up 500% in 8 months. Now the funny thing is that value have gone up with the metals, but it's the market caps that have lagged. So it's like I'm paraphrasing here, but it's like I've never seen this in my multi-decade career, every billionaire mining connoisseur. It's just absolutely ridiculous. I mean, it's almost painful to see because it's, I mean, if you're kind of down already on the state of the world, the state of the politics, I mean, I'm very much not a woke person. I think there's a bunch of absolute bullshit going on out there, and that's also why, obviously, I think we're in for a rude awakening one day, because we're spending money on crap that's not worth it. We're doing a lot of stuff that's not very productive. We're living in cuckoo land where it's like, oh, money just grows from trees, and the governments can just borrow and waste as much money as they want because you can, money's endless. Obviously, it comes from taxation and all that. So that's not how it works. But in the, basically every empire obviously believed that they would be around forever until they overspent, did too many wars or whatever, couldn't fund the empire, and then they collapsed. I mean, every single empire collapsed, and that's, from my understanding, typically from overspending and doing a bunch of stupid stuff. And again, just assuming that the standard of living we have today is going to continue forever, even though we're just borrowing more and more to just keep the standard of living. And when the chips are down at the end of the day, when you can't, pay the bill with credit anymore, then there's a rude awakening. But anyway, this is absolutely, offensive what's going on right now. But again, it still kind of fits because we have all these cryptos around still. Ether, Sand, whatever that is, Crow, Gala, Doge. Pretty much 99% of these are absolutely worthless, but they're not trading like they're worthless. So people are obviously okay holding something. Take Dogecoin. You own something that's worth $16 billion or something in market cap, even though it's, again, made as a joke. It's like there was no intention behind it of having value. It was made as a joke. $16 billion is at face value parked there, even though it's, for all intents and purposes, worth zero. Imagine if $16 billion flowed into the junior mining sector. Everything would be up like 20x. It's absolutely crazy. That's how small the junior mining sector is, and of course that's the interesting part. It's like, what really gets me going is like I'm looking at some, again, in light of this, some absolutely mind-blowing cases out there. The risk reward is just out of this world. It shouldn't even be possible. Gold should not be able to be at 2,700, and you can pick up stuff like reality was that gold was at 1,700. It's just absolutely crazy, and that in a way pisses me off because it's like, it's offensive. It's offensive how cheap it is, and you're sitting there and it's like getting tilted because you don't have any more money to invest. There's so many companies I would gladly add in. Current holdings, companies I don't even own yet. My appetite of buying ownership at these prices is almost, pretty much infinite. And that's why I'm already all in. So, okay, you're sitting there, it's like, okay, I'm already all in. I cannot do anything more really about these opportunities. That is it's like, there's never been clearer that, these are, let's say, this sector is a buy. Never been a bigger buy, and you're all in, and you can only see this continue, and like, oh man, these opportunities are still there, and I can't do anything more about it. If I just had a bunch more money to invest, I would not be tilted at all, because I would like, great, these opportunities are still here. Now I can add more. But when you are all in, then it at some point becomes kind of, frustrating. Yeah, in a sense, I hope you get what I mean. Even though, yes, as value investors, you should never really get frustrated about, oh, the biggest opportunity in 40 years is still here, and it might be still here for like 3, 4, 5 months yet. It's like, okay, when that's gone, I'm not going to see this for the rest of my life. So how much is there to complain about, even if I add 1% to my portfolio over the next 3, 4 months, let's say? That could, pay off bigly. I mean, if you add 1% and let's say you get 300-400% on that 1% in the next 3 years. Fast forward, let's say 10 years from now, 15. How much is that 1% portfolio addition worth? I don't know. Maybe like 15% or more of the portfolio today. I mean, it's just crazy. It's like, the effects of compounding. So everything counts. Absolutely everything counts. But knowing that is what is so stressful. Because it's like I just have an infinite appetite. But as soon as I get money, of course, I'm buying immediately. So it's gone like that. And then you're back to wishing you had more money. But yeah, so I mean, this is, I mean, yeah, like I say, some valuations are breathtaking. It's like, I think Integra / Florida Canyon is a great example. I mean, it's retarded. I don't know what it would cost to build, permit, and how long it would take to prove up and again permit and de-risk Florida Canyon. But like the market cap right now, I think for the combined entity, assuming the merger goes through, is like $230 million. It probably costs quite a bit more than that to, let's say, start from zero, drill up, permit, do economic studies, actually build Florida Canyon. And Florida Canyon on paper today, I think this is the higher case, like let's say $2,000 gold. I think Florida Canyon is, well, I'm not sure if that was for 2000 actually. Maybe I don't remember how I calculated Florida Canyons. But like a 2000 whatever, 650 gold right now. Florida Canyon most certainly is worth more than 300 million. And the market cap is 230. So, what do you get? Well, you get Delamar, which at $2,000 in the last economic study is worth 649 million. Today, that's probably closer to $1 billion using spot gold. Nevada North, also probably closer to $1 billion using spot gold. All the exploration potential in all of these projects and all the projects which are early stage discoveries or pre-discoveries, you have like Florida Red Canyon, for example, which has a Carlin gold discovery, had one of the best holes in all of Nevada, or maybe even actually the world in 2000. I think it was 21, which has been put on hold because of Delamar, Nevada North, and now Florida Canyon. But a Carlin discovery, when you get hits like that, what could that be? I mean, there's a possibility that Red Canyon has a Carlin giant. 5 million ounce plus Carlin high grade gold system. There's a possibility for sure in Nevada where success is basically worth the most. I just put 40 million there. Exploration Nevada North, I think this is actually too low. I think they're easily gonna add several 100,000 ounces of gold there. And that's gonna be proven to be worth a lot. I mean, at today's gold price, who knows what, if you put a 75% chance of finding, let's say at least 300,000 ounces today of heap leach gold. What's that worth? Especially if you're in Nevada and all that. And if you were producing at $2,700 gold, for example, maybe the margins would be like, I don't know, $1,700, $1,200, whatever it is. It's a lot of money. Which again, I have never seen anything like this. And this is higher case. It shouldn't even be a higher case because the higher case is a low case right now. So this, if we're using spot gold, this is probably around, I don't know, 2.5, $3 billion in MPV and implied MPV. Again, I have never, ever, ever, ever thought that I would see anything similar to this. And that is why 2024 absolutely blows the 2015 bear market low away by miles. And the good thing, of course, again with Integra and Florida Canyon, it's like it's offensive just seeing the market caps of both of these, given the implied total market cap. And what you have is like you're getting 3 companies in one plus several, or one could put it like this: Delamore, obviously flagship project worthy, multi-million ounce heap leach gold and silver deposit with district scale exploration potential. Nevada North, kind of similar. Nevada, extremely low strip, expected to grow a lot. Obviously, that's a really good project for any junior, really great project for any junior. Florida Canyon, having a mine, again, just having a mine in Nevada is very rare. You put all those 3 together and you pay $230 million for all of that. When Delamore alone, when Integra only had Delamore, and they had a market cap of $200 million in 2020. So apparently, if you believe Mr. Market, and this is why it's like, if you think the market is so rational and smart and all that, explain that to me. How, when Integra only had Delamore, it could have a 200 million market cap when gold was, let's say, sub $2,000. But when you add 2 additional projects, including a mine and including a bunch of other projects, and add a gold price of almost 2,700, and again, including a mine means that they're going to be cash flowing, you end up with almost the same market cap. Even though the company got like 2 to 3 times more valuable, or let's say 2.5 times more valuable just based on assets. And then the assets, thanks to the gold price going up $700, went up, I don't know, 100%, 50%, 70%, and you come back with the same market cap. How do you explain that? If the market is so all-knowing, it's so rational, it's so efficient, you can't beat it, everything makes sense, the market is always right, how can it be that wrong in 2020 in that case? No, it just does not hold water. This is why it's almost not fun anymore. This sector is almost not fun because it's you have to be absolutely brain dead not to be able to spot a buy here. It's like high probability, or let's say, if you can build a portfolio right now in the junior space that should have a very high chance of success of returning multiples over the next 3 to 5 years. I don't know what you're seeing. This is absolutely incredible. If I could have, it used to be that you had to take exploration risk. That you bought something at whatever, that you hoped one day could be worth $1 billion or something. It's like, okay, chance of success of that happening, maybe, given how few whatever great bears there are or success cases overall from exploration. So it's like, let's say 1 in every 200 juniors able to make a significant discovery and actually, prove up bankable value that is many multiples of what it's worth today. It's like meaningful success, not just hitting a good hole or two, but it's like actually proving up something that could become a mine and is mine worthy. That does not happen that often. And you can buy that with a combined NPV of over $2 billion today for 230 million. So it's like you can kind of, without taking exploration risk, you can build a portfolio where there's like obvious, pretty much 10-bagger potential over the next 3 to 5 years. And it's not 5% chance either. It's not like, or 3 or whatever, a high risk situation would be. No, you can literally buy proven stuff that's today is worth so much more than the market cap that you already buy a built-in 5 to 10 bagger at least. It's absolutely crazy. You never saw that stuff around during the 2016 highs, for example. Then you overpaid for stuff. First Majestic was pricing in higher silver price than spot silver. And juniors, I mean, there were a lot of juniors that would be trading a lot higher today if we had the 2016 sentiment levels. And back then, gold price was $1,300, $1,350. It's absolutely crazy how much just comes down to psychology of investors. Are there money? Is there money around? Are people bullish? Do they dare to buy anything? And when I see these juniors, and they're absolutely no brain cheap, some have validation from major miners, and you see barely any trading in them on any given day, even though they're obviously undervalued. It just makes me lose faith in humanity. And again, I can't do much about it because I already own the ones I'm looking at, let's say. And the only way to buy that one is to sell something else that's no-brainer cheap. But it means there's nobody that doesn't, or I should say, okay, so nobody on a given day has any money or willingness to buy a given, obviously undervalued gold junior out there. And you have Dogecoin at 16 billion market cap. It's absolutely fascinating. I don't think we're gonna make a lot of money. I think we're gonna make a huge amount of money because this is the most remarkable thing I have ever seen. I think it's like what happens is what people least expect. Because now even the obvious price to value arbitrage, the obvious opportunities is not enough to get people to buy for some reason. Meaning that people don't see these juniors as good investments, even though you already have on paper that they're worth like 5 to 10 times what they're priced at, with gold and silver trending higher. That is not still enough. With a built-in, easy to spot 5x upside, let's say, people would rather, what it seems, people rather buy Bitcoin with no margin of safety and just hope of it going higher one day. That is how dumb these markets have become. And that obviously, the marginal investor, I guess, is the marginal voter, and look at all the stuff that's going on out there. Maybe it's just extremely fitting. Yeah. Anyway, we have some people who are actually taking advantage of this. NexGold now, and I talked about them before. It's like I like this kind of stuff where you have a company backed by Frank Gustra. He's been in this space, and he's basically the one that said he has never seen anything like it. He has never seen junior mining companies being this undervalued compared to the value of their business, like where gold is trading. So now NexGold announced a merger with Signal Gold, creating Canada's most advanced near-term gold developers with a combined 4.7 million ounces of gold measured and indicated resources and plan to achieve 200,000 ounces of annual production. NexGold is quite advanced in their permitting at their Goliath gold project. I don't exactly know how advanced Signal Gold is, but it seems they're quite advanced. So again, this is just absolutely crazy. It probably cost more to drill up and move these companies along where they are to the stage they are in permitting than you can buy the whole company for. So the sunk costs are probably higher, and then that doesn't even factor in the time spent the hoops you need to jump through, and there's not even guarantees that you will get favorable, let's say, results on the permitting steps that have been taken so far. So you can buy an huge amount of birds in the hands for less than it costs to go out and hunt them. I have no idea why this sector is like it is, but that's one thing I do again, like with Integras and Sierra Madre and who else, like Magna Mining and stuff. Okay, so the market is brain dead. The market does what the market does. It votes with its feet, or I should say, its emotional feet. But if a company can kind of self-fund or semi-self-fund, then it doesn't really matter that much, because the gold price and the margins and the cash flow does not care about sentiment. So imagine if you could buy, let's say, okay, let's take a theoretical scenario. Let's say, let's take Integra. Let's say you buy Florida Canyon or Integra, whoever you want to buy. I think Florida Canyon is a bit cheaper. You're buying something for 230 million. Let's fast forward to 2029. Let's say 4 or 5 years from now. Theoretically, you could have 3 mines in operation by then. 3 mines. Let's say they're almost able to self-fund that, because let's add a bit of dilution. Let's round it up to 300 million market cap today. And Delamore gets built, and Delamore plus Florida Canyon is going to allow the building of Nevada North, and they extended the mine life at Florida Canyon, and there's obviously much more like sulfide potential and exploration potential at Delamore. So that's, I mean, whatever the mine lives are right now on paper, it's like I expect all of these to get much longer. I mean, again, at Nevada North, there's obvious exploration potential at Wildcat. Anyway, fast forward 2029. You bought it for 300. 3 mines up and running. We don't know what gold is going to be at that point in time. But if you just look at some, the assumed average all-in sustaining cost, and let's say we freeze the gold price here, I think they would do something like, just in ASIC margin, like 500 million or something per year if they have 3 mines up and running, which obviously would be more, almost twice as much as the current market cap. Or if we even rounded it up to 300 million. So imagine that scenario. So do you really care if the market gives 2 shits about it? Let's say again that they are able to, maybe with debt, whatever, and free cash flow from Florida Canyon. So I'm making some assumptions here, but let's round it up to 300 million. So you're buying ASIC margin stream in, let's say 4 or 5 years for 300 million today, and it amounts to 500-600 million 4 or 5 years from now. I mean, let's say they dividended out, I don't know, a fifth or a sixth of that, or let's say a fifth. I mean, compared to the current market cap, if we round up to 300 million, let's say you could get almost 50% in dividend yield by 2029. I mean, how crazy wouldn't that be? And the mines would obviously not be stopping by then, because Delamore and Delamore and Nevada North would basically just have started. So imagine if you had that for like 15 years more or 10 years more, whatever. I don't know how long lived Florida Canyon will be, but it's for a good amount of years, and that's excluding any further, let's say, upside in gold. To me, that's pretty crazy. And I can guarantee you that if they were able to do even half of that or 1/3 of that, the market cap will not be around 300 million. So is that like, oh, how wild would that be? Well, I don't think it would be wild at all. I expect Delamore to get permitted. I expect Nevada North to get permitted. They already have an in-house heap leach mining team in Florida Canyon. And they have plenty of exploration potential to increase the mine lives of all that. So they have the competence. I don't think there is going to be a problem of, if gold stays around these levels, of financing any of these projects. And there's, again, pretty simple heap leach projects with in-house expertise, so they should be able to do it. And the margins are expected to be very good at $2,600-700 gold. So again, if that were to happen, or dilute even more, let's say, but you have whatever, let's say 400 million of free cash flow in 4 or 5 years, or 300, whatever, it's like, take that times something, and it's not too hard to see a $2-3 billion market cap of Integra, which would be like, a 10 plus bagger from today's market cap. And again, compare that to, most discovery stories, which become, some become more than 10 baggers. But that usually takes 3 to 5 years, according to Rick Rule. The average 10 bagger, I think, is said it takes 3 to 5 years. And there are, it's hard to get a 10 bagger to start off with, because there's not a lot of, there's obviously not too many exploration success cases where you get that kind of stuff. But here you can get that in just a developer, and everything is laid out in front of you. You can look up the MPVs. All of this is like very tangible potential. An early stage exploration potential does not have a tangible 10 bagger, even though there's obviously a chance. So that is what's remarkable about this situation right now. Where you have tangible multi-baggers, even probable multi-baggers, I was going to say. Usually you have to take insane exploration risk to get a 5 to 10 bagger. And yes, any junior can, jump 500% if we go from a low sentiment environment to a high sentiment environment. But there's also, obviously, if you factor in that to these, developers, let's say gold goes to $3,000-4,000 over the next 4 or 5 years, and cost doesn't keep up, so actually margins expand more than they are already today. Then this kind of operation, assuming 3 mines in operation, let's say they have an AISC margin of $700-800 million. That would be considerably higher market cap than 2-3 billion. So again, I don't think, for the first time almost, I'm not going to say almost ever, but it's like we've never seen, I don't think, I've never seen a junior sector where it's easier to basically find multi-baggers. Because you can find multi-baggers in cases where the risks are not even high. And typically it's supposed to be high risk, high reward. But in some of these cases I see low risk, high reward. Take Barsele, another one. They're not self-funded. They don't have production. But it's one of the most, asymmetrical low risk, high reward cases that I know of. And again, going back to sunk cost, Agnico has been in charge of this since 2015. That's 9 years of pre-mining activity going on. Water sampling, everything basically needed for permits, etc., has been done by Agnico Eagle. So it's Agnico Eagle level quality, which is the highest in the world. Absolutely highest in the world. It's like Taj says that they build Cadillacs. They have the highest quality mines. They tend to not be the most low capex because they don't cut corners. But when they're up and running, they're the major with the lowest cost per ounce. They're the highest margin producer of the gold majors, and they only kind of pick tier 1 jurisdictions. So you have the highest possible level of pre-mining activities done here because Agnico Eagle has been doing it. And when I talk to Agnico Eagle guys up at Barsele, I mean, I don't remember exactly what it was, but I'm paraphrasing that it's like the most studied project in, or prepared project, let's say in all of Scandinavia, somewhere along those lines. Because again, they've had 9 years to do work. You can't some stuff like water testing and stuff. You can't buy that. I mean, if it is required of you to have a time series of like 4 or 5 years, you cannot pay up and make it go faster. If you need to measure the water quality over 4 years in order to come out with a time series that's enough to get environmental permits, whatever, it has to take 4 years minimum. So if you started today, it's impossible to get a mine up and running before 4 years, let's say. So a bunch of that stuff has been done. So that's sunk cost in time and money and quality done, because there's no junior that would do as robust of a job as Agnico Eagle when it comes to pre-mining activities, because they again are the Cadillacs they build the Cadillacs of the mining business. And you already have, if you just use $1,700 gold for $1,700 gold for the resource is already 3 million ounces, and that's an average depth of, let's say, 600 meters, and it's wide open. And this is only the Barsele main deposit. I mean, they've hits out here. They've hits at Risberget, they have hits at Norra, they have hits at Bastuträsk, I'm pretty sure. And that's not even the greater Barsele project. And then you add the Gold Line Belt. Okay, so this is, according to Taj, a top 10 project in the world, not 100% owned by a major, because Agnico Eagle owns 55% of it. But it's like, how rare are these projects, a project like this? Well, this is the second largest gold project in Scandinavia. Maybe actually in, I'm not going to say Europe. I think there's a big one in Romania or something, and there might be some other ones. Are they high quality? I don't know. This is expected to be very high margin because of, we have data from the Björkdal mine, which is just east, which is located here. So, I don't know, what is that? 150, 200 kilometers east, and they're mining 1.6 grams per ton underground, making bank on it. Barsele is considerably higher, and you can see other bulk mining projects here. A lot of them are owned by Agnico. This is refractory. I thought their actual resource grade was higher. Anyway, here you have Björkdal, okay, 1.7 grams here. Goldex, they're making bank on that. Laron, they're making bank on that. Malarty Yugi, they're going to make bank on that. I don't know, they might be mining it already. Detour, going to make bank on that. Young Davidson, which I've looked at before, that was bought by Alamos Gold in 2015, bulk underground mine, for $950 million. When gold was around $1,100, $1,200 per ounce. So this is obviously, on a standalone basis, this is already a mining worthy project. This will probably, at today's gold price, be worth way over $1 billion. Wide open, could get twice as big. Who knows, maybe more if it goes down past 1 kilometer. I mean, they think it has a shot of going down to 2 kilometers at least. So that's the bird in the hand. And then you get free exploration potential. I mean, basically no valuation risk, but all the upside potential at Harpsund, Nippas, Klippen, plus you have a new or another gold project, which seems actually very good. Again, Agnico Eagle drilled deposit, and they've had this since I think 2012 or something. First Nordic purchased it for I think 8 million, and Agnico Eagle took stock in First Nordic to pay for it. So we know it's like minimum, absolute minimum, of course, $8 million worth. Is that reflected in the market cap, you think? Absolutely not. This would be a flagship project for any junior out there. Yeah, again, it's absolutely crazy. It's like I see Integra, I see Barsele as some of the. I mean, it's just absurd risk rewards, like low risk high exploration, low risk high potential, or low risk high reward. Because if they miss on every single exploration project, it still doesn't change the fact that Barsele is worth, on paper, easily over $1 billion today, and they have 45% of it. And that's just Barsele. That's just these three zones here. Not including any exploration potential at depth or on long strike. It's absolutely crazy. Again, I don't get it. It's offensive. It really is offensive. You're supposed to take high risks to get high future returns, or the potential for high future returns. In this sector right now, we're buying stuff that took a lot of risk to find, let's say. Somebody proved it up. Somebody took the gamble of, high risk, high rewards. Like, okay, we're going to try and drill here. It costs money. Let's see if it's there. Now we get to see the cards flipped over. We see what they have already, with more stuff in the pipeline, and we get to buy it for less than it costs to drill up. So risk-free, and paying less than it costs to actually redo. Plus you get all the years of permitting and stuff. It's absolutely crazy. I mean, what's the sunk cost here, and what's the risk-adjusted sunk cost here? What would you pay for 9 years of Agnico quality preparation work with the locals? They seem very pro-mining. My understanding is there were some, people who were hesitant about mining when they first got into Barsele. I mean, I guess that's kind of understandable. But we have, when we went from the project, we had people waving at us. So obviously they weren't pointing fingers or giving us the FU. So yeah, I mean, what's that worth? What is all this worth? How easy is it to find? How easy it is to prove up? How long would it take? And then look what you can buy these companies for. So no wonder Frank Goosetrace, just bolting these together. He's hoarding. He's hoarding, and of course advanced near, because again, if the market doesn't give a crap about the de-risking value, how advanced they are, the fact that, a mine that can be in production in the next 3 years is worth more than a project that could be in production in 8 years. If the market doesn't give a crap about that, if you do, there's obvious opportunity to take advantage of there. Yeah, I guess I'm gonna wrap up this video, I think, right now. But I'm just saying, it's like, keep your heads cool. I mean, I don't expect to ever see this again. I don't know how long it will last. But I'm chronically stressed out by the fact that this could go away at any point in time. And, of course, let's see. There's plenty of stories out there dirt cheap stories that have this kind of pattern. Like consolidation, let's say. I mean, this is a joke of a valuation. But okay, somebody is selling for every person that's buying. Okay, if we look at accumulation distribution, it seems like from this point in time, there's accumulation going on. That's what it looks like if I'm reading this correct. Makes perfect sense to me, because I think that anybody that's net selling it intentionally, it's like, okay, it's a different story if you need the money or you're overexposed or whatever. Yes, there's absolutely reasons that are rational to sell even a cheap company. But I have a hard time that all of this selling is like, oh, 100% rational, for example. No, it might be, who knows, maybe people that have been stuck in the stock for a long time, they just, want to move on, stuff like that. So, okay, there is some selling. So it's like, okay, somebody's buying, including myself, buying these cheap shares. Somebody's willing to give them away at this price, which again is a joke, but it's up to them. What happens when these consolidations end? I mean, that's the thing, and I see this kind of similar thing going on in some, where it's like it's kept under wraps in a sense. It should be much higher, but isn't, because there's somebody still selling. Same with Integra, Florida Canyon. Just remarkable that it's not higher yet. But that doesn't last forever. So assuming it's like the people who have, let's say, people who buy stores like First Nordic because they think, well, this is easily a $1 stock, let's say, so they're not gonna, let's say, do any meaningful selling until it's up at $1. The more time, the more these stocks change hands. So it's like the people who won't be, let's say, really selling anything until $1 is just going up, and the people who are obviously willing to sell here, I mean, they're running out of shares. So one day in stores like this, the people who are, let's say, dumb enough, pardon my French, to sell these juniors so cheap, they will run out of shares, and the people who bought them are not going to sell until they're, let's say, materially higher. So all of a sudden, consolidation ends. The people who are selling down here to buy Dogecoin, they don't have any shares left to sell. Selling pressure goes away. All of a sudden an uptrend forms. Let's add some even more news showing how ridiculously undervalued it is. Let's say in this case they add a Swedish listing. They might add a discovery. It forms an uptrend, so you get traders in. So all of a sudden it's like, hey, 6 months from now, boom. Who knows, maybe at $1. It's like, you have no idea when it changes. It's just that as a value investor, you're not guessing too much about that. But obviously I can see a bunch of scenarios where that's, I mean, it should already be higher now, but it's kind of easy, somewhat easy to see also scenarios like, yeah, that's probably what's going on. Somebody's like been in the stock for ages now, for the first time since I don't know how long ago. I mean, let's check volume here, for example. So yeah, you can obviously see the volume start to kick up here. So who knows? Maybe somebody that's just simply getting out of mining has held the stock for years, and he's like, oh, finally I can sell out and be done with this sector. So he's giving away his shares because he wants to go into crypto or whatever. Those are the people that might be selling some of these juniors right now. When liquidity shows up, oh, they're like, oh, finally I can get out. Don't care about, they don't even want to know what the potential is today. They don't even want to know how the case has changed. They just want to get out. So they're selling with no real reason except they want to get out. Who knows? Might be a case at least. Might be the case. Thanks for listening. Consider me biased. I think I own shares of all companies I mentioned. assume I own shares of all companies mentioned. I just got a message, so I got distracted. This is not a buy or sell recommendation. You don't have to agree with anything I say. Again, I don't share your profits or your losses. I'm saying what I'm seeing and how I'm betting, and why. Integra is a banner sponsor. First Nordic is no, they're not a banner sponsor, but I'm a big investor in First Nordic, so I'm biased anyway. Yeah, if I mention any other companies, just assume I own them and or I'm sponsored. So again, it's like I'm biased and I can be wrong as well. Thanks for listening. Bye.